What's up, guys? Welcome back to another video. Thanks for tuning into Stock Essentials. We're going to be going over our weekly watch list, and this is going to be consisting of a lot of earnings plays. A lot of earnings reports are going to be happening next week, and there's definitely a lot of opportunity to play these stocks. As you can see, we have IBM, we have Ally Bank, we have Netflix, Chipotle. We have Coca-Cola, Johnson & Johnson, Verizon, Texas Instruments, Discover. We have AT&T, American Airlines, Southwest, Snapchat, Intel, American Express. Tons of companies are reporting earnings next week, and there's a lot of opportunity to be made playing options or just outright buying stock. So Netflix is going to be a popular one. Obviously, everyone has their eyes on that one, as well as Snapchat, Coca-Cola, AT&T, American Airlines, a lot of these companies. And the best way to play these stocks is not to buy options. That's really risky. You want to either just buy shares, sell cash secured puts, or play put credit spreads, which would be the best options to do. So you don't want to do anything too risky like buying calls, buying puts. You can easily lose a lot of money doing that. So the best way to do that would be strategies where data is actually on your side. So let's go to two of these stocks. Coca-Cola and AT&T are reporting earnings this week, and these are very great dividend stocks. AT&T, one of the most popular dividend stocks, they did cut their dividend yield by a bit, but they do still pay out a nice dividend of 7.34% every year. So AT&T is one of the most popular ones out there. And if we can take a look at the 5-year chart, it still hasn't recovered to its pre-coronavirus levels. So there's definitely a lot of opportunity with AT&T stock. It's still at it's still at its lows. So if you want to play AT&T stock, you could just outright buy shares, or you could sell some cash secured puts, which would be a good strategy as well. You could do something like a August 6th cash secured put. Let's go to sell put, and you're not going to receive too much premium for it. You could do this $28 strike, collect $39 of premium per contract you sell, which if you have a $28,000 account, you can sell 10 of these and collect $390 of premium. And if you get a sign on these shares, $28 per share is not bad at all, considering how good of a dividend stock AT&T is. The next dividend stock reporting earnings is going to be Coca-Cola, very popular dividend stock, and they're almost reaching up to the pre-coronavirus levels, but there's still a lot of growth potential with it. Coca-Cola is not going anywhere, so buying shares, adding more Coca-Cola to your portfolio could be a good strategy. Or you could also sell cash secured puts on the stock. Dividend yield just under 3%, but it's a very stable stock. It has a lot of growth as well, and it's just very popular in general. So if you want to play options, cash secured puts as well would be pretty good. What I'm looking at would be the somewhere between the $55 and the $56 strike, depending on how bullish you are. It is going to cost you a lot of collateral, $5,500 to put down in case you get assigned, but this is a very good stock, and I would highly recommend actually just buying shares of it. Very good dividend stock, and it is one of my favorite stocks to hold in my long-term Roth IRA portfolio. So next up we have Snap, and Snap is going to be pretty volatile. In the past few months, they've been kind of consolidating within this period, hitting all-time highs of almost $70, and is sitting just under $60. So there could be some good growth potential with Snapchat. As we can see, it has a nice 5-year chart. They have great growth. They've improved their advertising, so they're producing a lot of revenue. Snapchat, I'm expecting, is going to report some pretty good earnings, but of course, playing calls would be pretty risky. So what I'm looking at is going to sell some cash secured puts, and I like to do cash secured puts 2 to 3 weeks out because you're going to be collecting the most premium on your contracts that way. So we can actually do a July 30th expiration date, and as we can see, premiums are going to be pretty high on this stock. Implied volatility is going to be high. A lot of people are anticipating a big move. So some cash secured puts on Snapchat will yield you a lot of premium. But I like to be safe. $55 strike price is going to collect you $211, which is pretty sweet, which is $4 under the current stock price. So if Snapchat stays above $55, you're going to be making $211 per contract you sell, which is pretty sweet. You could also do put credit spreads on this stock. Say if you have a smaller account, a smaller portfolio, you could sell the $55 strike and buy the one under it, the $54 strike. It'll be a put credit spread, and you're basically going to collect $42 of premium, and you're going to be putting down a collateral of $100. So you're going to be turning the max risk in this trade is going to be $58. So you're basically almost doubling your money if Snapchat stays above $55 by expiration. And of course, the best way to play options is actually sell these contracts the day before, and then after earnings reports happens, then the premiums on these contracts actually end up being lower due to the IV crush, which is why I love playing earnings so much, doing theta positive strategies. So another stock that we're going to be looking at is, of course, Netflix, and this is going to be a very expensive stock to sell cash secured puts on. So I highly recommend just doing put credit spreads, or if you have an outward bullish look on the stock, you could just outright buy shares. It has very good growth potential, and it's a very good stock for the long term. Netflix is not going anywhere anytime soon. So we could do like an August 6th expiration date. If you're bullish on it, you want to do a put credit spread. Remember, put credit spread is bullish or neutral. It's not actually bearish because we're selling these contracts. We're receiving a credit for opening it. So we could do something like a 5/20 expiration date. So sell that, and we can buy the, say, for simplicity reasons, we could do the 5/15 strike. And as you can see here, total credit $215. This means that if Netflix stays above this price point of $520, we will receive a credit of $215, which is almost doubling your money on Netflix stock. And the best thing about earnings is even if the stock goes slightly down, you can still make a ton of money on these contracts because of the IV crush. A lot of people are anticipating during earnings season big movements. So if the stock ends up not moving, you're still going to make a lot of money, and you can close it out the next day for a nice profit. So this would be a nice credit spread for Netflix stock. And the last stock we're going to be looking at is American Airlines, which has a ton of potential in the future, especially with all of the restrictions being lifted, a lot of the mask mandates being lifted as well. A lot of people are flying. A lot of people are basically wanting to go on vacations during the summer, and American Airlines is definitely a great contender. We take a look at the 5-year; it still hasn't recovered to the pre-coronavirus levels, so there's a lot of potential for American Airlines as well. Very good company to sell some puts on. Stock price is pretty cheap. You only need $2,000 collateral. We could do something like an August 6th expiration date, and we can collect $59 of premium for a $19 strike per contract, which is pretty sweet. That's about a 4 to 5% return in just 2 to 3 weeks. Of course, it's going to be kind of risky. We don't know if American Airlines is going to report good earnings, but I do think there's a lot of growth potential with this company, and if you get assigned at $19 per share, holding it for the long term could be pretty good as we wait for American Airlines and the airlines industry in general to recover to its pre-coronavirus highs. So that's about it for this video. If it helped you in any way, please leave a like, comment down below what you're watching for the next week, and of course subscribe to our channel. It helps out a lot, and we make daily videos on stocks and options. Thanks for watching.